China holds a staggering 3.2 trillion US dollar assets, more than any nation on Earth. Treasury bonds, corporate bonds, cash reserves, mortgage-backed securities, and even American stocks. For decades, this massive pile of dollars has been treated as a terrifying idea waiting to explode. Analysts, politicians, and the media have asked the same dramatic question over and over again. What if China decides to dump it all? What if Beijing wakes up one morning, orders its traders to sell every US bond they own, and floods the market with so much supply that the entire American financial system cracks? People imagine the dollar collapsing, interest rates shooting through the roof, home prices crashing, banks failing, and the US government unable to borrow money. They call it the nuclear option,
swiftly.
the financial weapon of mass destruction, the secret ace that supposedly keeps American leaders awake at night. But the truth, the real truth, is far more shocking than the fear. Because China won't use this weapon. China can't use it. Not because they don't want to. Not because they're scared of America. But because pulling that trigger would destroy China so completely, so instantly, that the United States would almost look unharmed by comparison. The $3.2 trillion isn't a weapon pointed at America. It's a trap wrapped around both countries' necks.
Sell the 8 shares now. They are dropping.
And neither side knows how to escape without losing everything.
Get me out of Ping An. It's halted again.
To understand why this trap exists, we need to go back 40 years, to when China built its rise on exports. China sold the world everything: electronics, furniture, machinery, phones, toys, clothing, everything.
Sell everything! It's crashing! We're losing millions! Get out! Get out now!
Chinese companies collected those dollars, exchanged them at Chinese banks, and those banks handed the dollars to China's central bank. Then China had to do something with trillions of dollars pouring in every single year. They couldn't keep it as cash. Cash loses value over time. So they did the obvious thing. They bought US Treasury bonds, the safest, most liquid financial asset in the world. And every time China bought more treasuries, something important happened. China was buying dollars and selling yuan. That kept China's currency weak. A weak yuan made Chinese goods cheaper for Americans. Cheaper goods
need to liquidate the foreign holdings immediately.
20,000 shares at 5. Meant more dollars.
The euro is
and
dropping.
More
Sell
dollars
now.
meant more treasury buying. China's entire economic miracle, hundreds of millions rising out of poverty, becoming the factory of the world, generating massive surpluses, was built on this cycle. That $3.2 trillion didn't appear by accident. It was the engine that powered China's rise. And that's exactly why it's not easy to unwind. China's dollar holdings are not just investments. They are the foundation of the last 40 years of Chinese growth. But let's entertain the fantasy scenario, the nightmare that American politicians love to warn about. Imagine China suddenly calls its traders and says, "Sell everything now." $731 billion of US Treasuries hit the market instantly. The Treasury market, usually the calmest, deepest market on Earth, would freeze. Prices would collapse. Yields would skyrocket. Mortgage rates could hit 13, 14, even 15%. The US housing market would stop. Consumer spending would collapse. Corporate borrowing would dry up. Banks holding treasuries on their balance sheets would see their assets melt in value. The Federal Reserve would have to step in and print hundreds of billions to stop the bleeding. Inflation would explode again. The dollar would drop in value against other currencies. Yes, America would be hurt. Badly. But here is the punchline that almost no one understands. China would be hit even harder, even faster, and even more violently. Why? Because if China dumps treasuries, the dollar collapses. And when the dollar collapses, China's remaining $2.5 trillion of dollar assets instantly lose value. A 30% fall in the dollar wipes out $750 billion of China's wealth in a matter of weeks. That is nearly 1/4
Still
of all
going up.
China's
We can't
foreign
stop it.
reserves. Imagine your country losing almost $1 trillion instantly. That's not a bad day. That's a financial heart attack. But it gets worse. China's economy depends massively
We have to
on
sell
exports.
immediately.
America is China's biggest customer, buying around $500 billion of Chinese goods every year. If the dollar collapses, Americans can't afford Chinese products anymore. Demand vanishes. Chinese factories shut down. Millions lose jobs. And that's just the start. Because when the dollar falls, the yuan rises. If the dollar drops 30%, the yuan jumps around 40%. That means Chinese goods become 40% more expensive overnight. China becomes uncompetitive. Their export engine dies instantly. But the real killer is China's corporate debt. Chinese companies owe about $3 trillion in dollar loans. When the dollar collapses, those debts become far more expensive relative to Chinese income. Companies can't repay. Defaults race through the system. Chinese banks implode. Beijing is forced to bail everyone out by printing yuan, creating inflation at home. Meanwhile, energy, oil, gas, coal, is priced globally in dollars. So if the dollar collapses but oil prices stay the same, China now has to spend far more yuan to buy the same amount of energy. Energy costs explode. Manufacturing collapses. Inflation spikes. Social unrest starts to grow. And all of this devastation hits China before America even feels the full impact of the crisis. This is why China can't dump dollars. Not because they're afraid, but because doing so sets their own house on fire while they're still inside it. The dollar holdings are not an attack strategy. They're a hostage situation. China is holding trillions in dollar assets that they cannot safely sell. America knows China can't dump them without destroying itself. And China knows the US can't freeze those assets without pushing China into a corner where dumping becomes their only option. This is mutual destruction, the financial version of two nuclear powers pointing missiles at each other, knowing that if one launches, both countries die. So what is China doing instead?
烤猪肉，很好
They
吃
are
的烤
trying
猪
to
肉。
escape the trap slowly,
这个怎么
carefully,
卖的？
over
给
decades.
我来2个。
First, they're buying gold, thousands of tons. Official numbers say 2,300 tons. Real numbers are closer to 5,000 or even 6,000 tons. Gold can't be frozen. Gold can't be sanctioned. Gold doesn't depend on America. Second, China is building an alternative financial system. They launched the CIPS payment network, their version of SWIFT. It lets countries trade in yuan instead of dollars. It handles around $14 trillion a year and is growing fast. They've also created currency swap agreements with over 40 nations. This lets China trade directly in yuan with countries like Russia, Brazil, Saudi Arabia, Argentina, the UAE, and Pakistan. Third, China is trying to shift their economy toward domestic consumption, relying less on exports to the US. They're raising wages, building infrastructure, expanding healthcare, encouraging citizens to spend more at home. But here's the problem. These strategies take decades. You can't unwind $3.2 trillion in exposure overnight. China might need another 20 to 30 years to fully escape. Meanwhile, the dollar has problems of its own. US debt keeps rising. Inflation has been persistent. The Federal Reserve keeps printing money to stabilize markets. The dollar's share of global reserves is slowly falling. It was 72% in 2000. about 57% in 2025. At this pace, it may drop below 50% by 2028 or early 2030s. When the reserve share drops below half, global confidence may break. Other countries may begin shifting away from the dollar more aggressively.
Sell everything right now!
And China,
It's dropping
still
too fast.
holding
Get out!
trillions
Get out!
in dollar exposure, would face catastrophic losses. That is the danger. China can't sell without dying. But China also can't hold dollars forever if the dollar weakens on its own. This is why both the US and China are trapped. China is trapped with too many dollars. The US is trapped because they can't punish China financially like they punished Russia. And both economies depend on stability. But the system is becoming unstable. What happens next? There are three possible futures. The first is a smooth transition, where the dollar slowly declines, but remains important worldwide. Maybe we end up with multiple reserve currencies. The euro in Europe, the yuan in Asia, the dollar in the Americas. This is the best-case scenario, but only a 20% chance. The second is a crisis transition. Something big triggers panic. A debt ceiling crisis, a banking collapse, a geopolitical shock. Suddenly, the world loses confidence in the dollar. China is forced to react, and the global financial system goes through a violent reset. This has about a 50% chance. The third scenario is mutual collapse. The dollar falls under its own weight before China escapes. China loses trillions. America suffers too. Both economies struggle for years. This is about a 30% chance. None of these outcomes are good, but some are survivable,
The Asian markets are
especially
following
for
suit.
individuals
Get
who
me the
prepare
Treasury
early.
Secretary now.
And that's why understanding this trap matters. Not to cheer for one side or the other, not to repeat headlines, but to protect yourself. Because while governments pretend everything is fine, this financial time bomb is ticking in the background, inching closer every year. And here's the part no one is talking about. While China reduces treasuries slowly, they're quietly buying three other assets besides gold. Assets that reveal exactly where the smartest money in the world believes long-term value will survive a global currency reset. What those assets are will shock you. And in the next episode, we're going to break them down one by one. This is the investor wisdom. If you appreciate deep, clear explanations that cut through noise and reveal the truth behind global finance, make sure you subscribe,
The global network
hit the
is
like
complete.
button,
Phase
and
one
turn
is
on all
operational.
notifications so you never miss the next chapter in this unfolding financial drama. Because over the next 5 years, this trap will either unwind peacefully or explode suddenly. And either way, it will be the most important financial story of our lifetime. Stay prepared, stay informed, and stay wise with the investor wisdom.